Hi there, Stan the Annuity Man, America's annuity agent licensed in all 50 states and Puerto Rico, founder of CGO, Contractual Guarantees Only. Question of the day, are fixed annuity rates going up? I guess are fixed rates going up? We can talk about both of those, and you can find out if I'm a Stengali, which is a Svengali, of interest rates, and if I know where things are going, if I can see the future, if I can see the annuity future. If anyone can, it's me after this. So are fixed annuity rates going up? Well, let's talk about interest rates and annuities first, because I think the context of that and the foundation, the factual foundation I'm going to put in place, will make you think a little differently about interest rates and annuities, and what interest rates and annuity rates are two different things, okay? Interest rates, we all know, well, the Fed, son, I've been following the Fed for a long time. I kind of know what the Fed's going to do. No, you don't, okay? Because if you do, you're on a Learjet trading interest rate futures and you're never talking to anybody, hopefully. Nobody knows where those interest rates are going to go. We can take a gander at it. We can take a stab at it. We can throw a dart at it. All I can tell you is, you know, we have 39 trillion and counting in debt, so it's probably a good prediction that regardless of what kind of numbers are shown, or numbers are going to be shown to maybe point us in the direction of lowering interest rates, because we have to service the debt based upon the interest rate levels, okay? Now, with annuities, there's two types of rates that you need to understand. The first rate is, say, a MYGA rate, like the annuity industry version of a CD is called a multi-year guarantee annuity. It's called a MYGA. You can go to my site at theannuityman.com. You can check the best rates in your state. You can download a MYGA owner's manual for free that I wrote that talks about it. You can go to my YouTube channel, and there's a few hundred videos on MYGAs that I've done that if you really want to go down the rabbit hole, that's a rate, a guaranteed rate, that is contractual. Now, 20% of that rate is about the Fed. The other parts of that, how they determine that rate, is on, you know, the pricing on lifetime income, life insurance. Remember, life insurance companies issue annuities, issue MYGAs, the bond portfolio, the legacy bond portfolio that they have, the age range tranches that they have for lifetime income. They have a myriad of what I call pricing levers. Whereas the CD looks straight at the Fed, MYGAs glance at the Fed, okay? So that's an interest rate that they look at the Fed, but it doesn't determine the whole thing, because it's capitalistic inside of a life insurance company. They're trying to attract your money and make money, but not as much money as you think. The other rate, our annuity rates going up, the other rate is the payout rate for lifetime income. I know you weren't expecting this, but this is very important. When you buy a lifetime income product like a single premium immediate annuity, SPIA, deferred income annuity, DIA, qualified longevity annuity contract, QLAC, or an income rider, if you look at the quote that you can run on my site at theannuityman.com, or that we can customize and send you, you're going to see a payout rate. And that truly is a mathematical reflection of your life expectancy or life expectancies. Are those going up? Maybe, okay, maybe. Are they going down? Maybe. We don't know, but what we do know is artificial intelligence is getting ready to change the game and lengthen out life expectancy tables, which will change that payout rate. So you have interest rates, the Fed, you have annuity rates, which is tiny portion of the Fed, but it's rates, and then you have payout rate for lifetime income products. So the broad question, are rates going up? On this one, I'd say no, which is the Fed, because we're just so deep in debt. We've got to lower it. Somehow, they've got to cook the books and cook the numbers that they're showing to lower it, or give the new Fed guy or gal the reason to lower it, because we got to service the debt. So I'm going to say it's going lower here. The middle one, which is annuity rate, I don't know. I think it's 50-50 where it goes higher or lower, because life insurance companies that issue annuities want customers, and there's 15 to 16,000 people turning 65 every day, which means there's a demographic tidal wave of customers, which means that they're going to try to attract them. And because annuities are commodity products, and you go to our site at theannuityman.com, you're going to quote all carriers for the highest contractual guarantee. Somebody's going to be raising rates to get your money. So on this one, I'm going to say 50-50, leaning toward rates are going up. Rates meaning annuity type rates, which is a combination of 4 or 5 pricing levers. Okay? So the third one, are payout rates going up or down? Again, commodity product, companies wanting your business. All I'm going to tell you on this side here is eventually, and it might be tomorrow, it might be a year from now, it might be 5 years from now, but eventually, artificial intelligence, GLP-1, people losing weight on GLP-1 medication, that's going to change the game. That's going to change the game. By the way, Big C and Dr. V behind the camera, side note, I read this the other day. Hope it's true. I think it is, because I read it in 2 or 3 different places. The GLP-1s, established yourself stuff that's now in pill form, which, by the way, this is interesting. More people tried GLP-1 weight loss drugs than tried iPhones when they first came out. Over 25% of households are using GLP-1 weight loss medications. Where did they come from, Big C? From the saliva of a Gila monster. True story. Which means that some biologist, some crazy went, you know what? That Gila monster spit is very, very fascinating. Think about it, though. That's where it came from, and then they da-da-da-da-da. Because I guess Gila monsters don't eat a lot. And if you think about it, you don't see a lot of Gila monsters at fast food restaurants. So that right there will tell you. Okay? So are annuity rates going up? Yes, I did tie that all back in. How about that? Fed rates, yeah, they're going down. Annuity rates, I think they're going up because of the demographic tidal wave and companies being able to price on different things, not just interest rates, to attract your money. And then payout rates are going to change against you, meaning the artificial intelligence breakthroughs and the medical breakthroughs are going to, that's going to shorten, that time frame is going to shorten, which means your life expectancy is going to lengthen out, projected, which means the payments will be lower. So it's a good question, but 3 different types of rates inside of the annuity world that not many people talk about. One last thing on the payout rate. A lot of goober annuity agents out there are going, well, get you this upfront bonus and get you this 8% roll up over here and get you lifetime income over here, right here. They never talk about the payout rate. That's where the game's played. Some of the highest bonus products with the highest roll up have the lowest payout rate. So it's all about the payout rate when it comes to lifetime income. One other thing over here on the payout rate side that drives me crazy, we do have some competitors. I know it's hard to believe. I don't have a competitor, but some companies try to compete with the Annuity Man, and they'll say, you're getting a 7.8% SPIA. No, that's the payout rate, player. That's not yield. And they put it up there like it's yield, and I'm going, oh my God, this is why my head hurts sometimes, because that's misleading and fraudulent. And I've actually called some of the CEOs, go, man, you need to take that down. Well, I'm not taking that down. Okay, whatever. Because payout rate. And payout rates, if AI comes through, it's going to go lower, right? But the reason that you quote all carriers is carriers have to fill those age tranches that I always talk about, and maybe they raise it just to fill that tranche for your age range. They're commodity products. So if I can get one thing through to you, this isn't like, when you see CNBC and Fox Business going, well, the Fed's meeting today. You need to go, who cares? Who gives a crap? When you're buying contractual guarantees for annuities for lifetime income principal protection, you don't care, okay? You don't care because these annuity companies are trying to attract your money and provide the highest contractual guarantees. For lifetime income, it's got to be A+ or better. So with that being said, do me one last favor. I did a video on lifetime income. That's a little bit longer, but it tells about the pricing. Goes a little bit more in depth with this, but this was gold is what this was. This was gold. But watch that. I think you'll learn something, and go to our site at theannuityman.com, download my free owner's manuals, run quotes, and you can contact me at stan@theannuityman.com. See you next time.